Today we're diving into a question I guarantee every new investor has asked themselves at some point. Should I invest in an ETF or should I pick individual stocks first? And trust me, this question isn't as simple as some people on YouTube or other platforms make it sound. Whether you're starting with $100, $10,000 or more, this decision can shape the way you build your wealth for the long run. By the end of this video, hopefully you'll know some of the pros, cons, and risks of both ETFs and individual stocks, and be able to make a more educated decision to see which one suits your personal investing goals better. Overall, we'll start with stocks. Let's begin with what exactly is a stock. A stock represents ownership in a specific company. When you buy a share, you own a small piece of that company. If the business performs well, the stock price potentially rises, and you benefit from the capital growth. You might also get dividends, which are small payouts from the company's profits. For example, if you had invested in Amazon 10 years ago, your money would have multiplied many times over. But if you picked a struggling company like Kodak or Blockbusters, you might have lost everything. So, stocks are high risk and high reward investments. Why do people love stocks? They do have huge potential for growth, especially if you choose the right companies early. Some companies pay consistent dividends, creating a passive income, and you might feel a personal connection to the business you believe in. What are the downsides? Stocks are exposed to company-specific risks. One earnings miss, a bad CEO decision, or a global event can crash a stock price. Emotional decisions often lead people to sell at the worst possible moments. So that's a bit more about stocks. Now we can hopefully understand ETFs. An ETF stands for an exchange-traded fund. Think of an ETF like a giant basket of stocks. Instead of buying one individual company, you buy into a fund that holds dozens or even thousands of companies. For example, an ETF in my portfolio is VGS, which gives you access to over 1,500 global companies, including the likes of Apple, Microsoft, Johnson & Johnson, and so on. You can also get country-specific ones, such as VOO, which is another one I hold, which tracks the S&P 500, or even VAS, which tracks the top 300 Australian companies. So why do beginners love ETFs? They offer instant diversification, much lower risks compared to picking individual stocks, and less emotional stress. You don't have to worry about every piece of news affecting your entire portfolio. ETFs also have downsides. You potentially won't be getting rich overnight. ETFs usually track the market's steady growth. You might also pay small management fees. Have a look into this to make sure the ETF you're investing in is worth it for you. If you like the idea of being hands-on and actively selecting companies, ETFs for some investors can feel a bit boring. We can also look at the risk versus reward, the real-world comparison. So let's say you have $10,000 to invest today. Scenario A, you put it all into one stock, such as a popular one like Amazon or Tesla. If the stock soars 30%, your $10,000 turns into $13,000 in just a few months. Awesome. But if the stock crashes 30%, your $10,000 turns into $7,000, and you feel every bit of that loss. Scenario B is you put the $10,000 into an ETF. Here, the risk is spread across hundreds or thousands of companies. If one or two underperform, it might barely dent your portfolio. And historically, markets tend to recover over time. So some of the key takeaways are, if you're earlier in investing journey, reducing emotional stress and risk with an ETF can potentially help you stay invested long enough to succeed. Chasing individual stock winners can be exciting, but this requires a thick skin and lots of research. There's also an emotional side to investing. One thing not often talked about enough is the emotional roller coaster that comes with investing in the stock market. When you invest in an individual stock, the ups and downs can be intense. A stock you believe in could drop 20% in a single week, even if the business is still strong, and that can make an experienced investor second guess themselves. ETFs tend to smooth out this ride because you're automatically diversified, even during big events like COVID, the inflation scares recently, and tech pullbacks. ETFs usually recover more predictably than compared to individual stocks, and that matters because the real secret to building wealth isn't timing the market, as you've probably heard, it's time in the market. So next is my real world approach. I'll be honest, I use both strategies. When I first started, I was picking individual stocks, such as Apple, my first ever investment, but I did also diversify, like I mentioned, into VOO. And now my portfolio equates to ETFs sitting at around 70% of the total portfolio value, but I still hold individual stocks, which I quite enjoy because it gives me the broad market tracking diversification, and I still get the joy of picking stocks that I'm aligned with and I believe in long term. Overall, it's taught me the approach of staying tough and investing during times we're down, such as 2022, when I taught myself some really good lessons of going through when my stock portfolio was down over 20% and continuously investing, which allowed for the growth in 23 and 24. It's important to learn these lessons, especially if you're going to be investing long term in the stock market. So what is the answer? If you're just starting out, you can potentially look at focusing on ETFs first and building stable foundations and growing from there. Or, if you want more control, you can pick individual stocks that you believe in, but make sure you do your research on both the ETF you want to invest in and the individual stock. Both will allow you to gain experience in the market and hopefully some confidence and learn some good long-term lessons. The most important thing many people say is to start. The longer you wait, potentially the harder it is to catch up. And I'd love to hear from you if you are an ETF investor, a stock picker, or if you like a mix of both. Feel free to leave your thoughts in the comments, and if you found this video helpful, please give it a thumbs up and share how your stock portfolio is doing. I also share weekly updates on mine on this channel, which you can feel free to check out. Thank you.